So for the next topics, we have one major one, and the second one is a bit minor. So first of all, why inflation still feels high despite the numbers declining? The Department of Statistics, they've recently released Malaysia's CPI figures. They came in at 2.0% for July. But if you ask anyone on the street, right, if you ask any Malaysian on the street on what are their thoughts on inflation currently, I'm sure the majority of them will say that inflation is still much too high. Now, there are several reasons for this, which is why we will discuss later. Next up, this one is a smaller one. MIDF's report shows foreign net selling in the Bursa market. After 6 consecutive weeks or so of net buying from them, they've finally switched into profit-taking mode. So this and more in our weekly analysis. As usual, not financial or legal advice. A quick shout out to all our current learners and gatherers, our patrons. Thank you all so much for your support. Allow me to start with Andrew, Wendy, Edward, Alex, Cici, Is, Morpheus, Urshad, Caveman Balls, Calvin, Kai, Thian, Tommy, Jinkang, Adrian, Eric, JS, Wen Yan, Dean, Duhan, Ken, Faris, and Alan, as well as all of our learner members. So let's get started with tonight's topics. Let me clear off the more minor ones first. Foreign investors, they are taking profits. Take a look at this chart over here. Net foreign fund flows into Malaysian equities since August 2021. You can see that in the past 6 weeks leading up to August 25th, right, foreign investors, they've been heavily acquiring Malaysian equities. In fact, it was a record inflow of 2.03 billion ringgit. Now, this obviously caused the Malaysian market. I'm sure some of you guys, if you're looking at the Bursa market, you'll know July and August has been a particularly good month for the Malaysian market as it has rallied by 5.82%. But this net buying streak from foreign investors came to an end for the week ending 25th of August, and they net sold 153.4 million that week. So top three sectors. So despite this outflow, right, some sectors they are seeing quite a bit of inflows also. These include utilities, 122.4 million, plantation, 112 million, and finally property, 54.0 million. So the sectors that saw notable outflows from foreign investors, they were financial services. Now these include banks, 222.3 million, consumer products and services, 107.1 million, and finally transportation and logistics, 60.2 million. So diving into the details, take a look at the stocks that saw notable volume. Now, there are a lot of things to talk about over here, so I will only go through what foreign investors and local institutions are doing. So the top four stocks that's seen quite a lot of inflow for the week ending 25th of August is the Naga National, Boosted Plantations, UMW Holdings, and SP Setia. Now, foreign investors, they were selling Public Bank, Maybank, Pressmetal, CIMB Group Holdings. As I've mentioned just now, the financial services sector. Now, take a look at local institutions, top four stocks. Now, they're kind of like swapping hands with foreign investors. You can see over here, foreign investors, they've been selling CIMB Group. Meanwhile, local institutions, they are acquiring CIMB Group. You have Pressmetal, Nestle, Petronas Dagangan. Meanwhile, UMW Holdings also kind of swapping hands with foreigners. SP Setia, Maxis, YTL Power International, they've seen quite a bit of outflows from local institutions. Now, a lot of people still think that the reports that I give you guys a breakdown of every 1 or 2 weeks is bought, but it's actually free. You guys can actually access these reports from MIDF. Just Google search MIDF reports, and within there, search for weekly fund flows, and you can take a look at all of the details that I am discussing today and more. Okay, so year-to-date performance of Asian benchmark indices comparing the Malaysian market to the entire Asian market. The Bursa market has went from the second worst performer to the fifth, which is good news. We used to be here, okay, and Thailand used to be one of the worst performing stock markets. Yeah, in the Malaysian market, 6 to 7 weeks ago, we were the second worst performing market. But year to date, foreign investors, they have been still net sellers of domestic equities at a rate of 2.56 billion ringgit. Now, this is even after they've acquired 2.0 something billion in the past 6 weeks or so. So Thailand, one of the weakest performing markets in MIDF's tracking due to political instability. I'm not going to talk too much about that, but there's a lot of problems going on with Thailand right now. So now on to the main topic of the night, talk about inflation. Malaysia's latest CPI data shows inflation moderating. Overall CPI cooled from 2.4% the previous month, now this is in June, to 2.0% in July, the lowest level for 2023. In fact, this figure itself, right, 2.0%, it's the lowest since August 2021, which is quite good news, okay? Core CPI, if we take out volatile items like food and fuel, showed a similar downtrend, moderated 0.3% to 2.8%. Compared to other countries, Malaysia's inflation is among the lowest globally. This one is also specified by the Department of Statistics. So I'm just going to call them as DOSM since they stand for Department of Statistics Malaysia. So Eurozone inflation is still pretty high, 5.3%. Philippines, 4.7%. Singapore, 4.1%, our closest neighbor. United States of America, 3.2%. Indonesia, 3.1%. So next up, we've came a long way from 4.8%. You can take a look at this trend over here. Actually, the peak wasn't 4.7%. In fact, in 2021, Malaysia's inflation went as high as 4.8 or even 4.9%. So it's a lot of progress. Yeah, we've came a long way. 4.7, 4.5, 4.4, and the most recent figure being 2.0%, right? But a lot of people, if you ask anyone on the street today, right, they still feel that inflation is much too high. But then again, this figure itself, 2.0%, is encouraging, especially for Bank Negara Malaysia. It's more evidence for Bank Negara Malaysia to hold the overnight policy rate steady at 3.0% in its upcoming meetings. But let's deal with the problem over here. Why does inflation still feel so high despite the numbers declining? Well, I got two major reasons for you guys. First of all is math, and secondly is psychology. Yeah, a lot of people tend to just stick with the math and think that, hey, inflation is all just a numbers game. But in reality, there's a lot of psychology involved as well. Okay, and before we dive deeper, let me just help you guys really understand what CPI really means. So CPI stands for Consumer Price Index. It is basically an index that measures the monthly change in prices paid by consumers. So just think of it as Dawson. They take the average prices of all the retail outlets across the country, yeah, then they divide it into specific baskets of goods and services. Then they round it up, take the average. That's how they derive the overall consumer price index. That figure itself, 2.0%. Though CPI is widely used to measure inflation, it does not accurately reflect the true cost of living. Yeah, there's a big limitation over here. And talking about the basket of goods and services, right? I've actually shown you guys just now from Dawson's report. You can see over here. So these are the specific baskets of goods and services that Dawson breaks it down into. And after that, they just take the average figure and they come up with this overall figure over here. Okay. So the huge limitation is that CPI assumes all spending patterns of Malaysians are even, regardless of whether you're rich or poor or not. So no matter whether this guy is a T20, extremely rich, or a B40, the overall CPI is 2% for all of them, which is a very, I would say, flawed assumption. Okay, that's one of the biggest limitations. But in truth, inflation is actually relative. Okay, a poor person might spend more on certain goods, therefore they feel higher inflation compared to a richer person. Okay, though the overall CPI has been steadily moderating, inflation for specific groups like food and non-alcoholic beverages still remain high. So you take a look at this basket over here. Okay, overall CPI came in at 2.0%, but this specific group is almost double. It's more than double actually at 4.4%. And Dawson has also divided this group into a few other subgroups. Okay, and you can see that meat, food at home, rice, bread, other cereals still have elevated inflation. And at the end of the day, if these items make up a large part of your daily expenses, you may perceive inflation as still high. Okay, and this is in the case true for the poorer people because they allocate more into all of these basic necessities. Okay, as compared to a rich person who spends more on other groups, say alcoholic beverages, tobacco, clothing and footwear, etc., etc. You can see that the inflation rate is much more lower. So for that, the richer person, their inflation in reality is lower compared to the people who spend more on these important groups. Okay, so that's the first reason. Second reason, inflation varies from region to region. Now, you can't just, well, the rounded figure of 2.0% is just the average figure. But in reality, there are 6 states recorded increases above the national inflation level. Now, these are Pahang, 2.6%, Sarawak, 2.6%, Wilayah Persekutuan Putrajaya, 2.6%, Perak, 2.4%, Selangor, 2.4%, and Malacca, 2.2%. So if you're living in any of these areas, right, you may perceive inflation as higher than reported. So next reason, inflation is also psychological. It's not just a numbers game. People tend to notice price increases more than decreases. Sorry, tend to notice price increases more than price decreases. Yeah, correct. So when prices go up and they stay there, right, it kind of creates a perception of rising costs, even if overall inflation rate is moderating. Now, I really like this article published by Investopedia. Let me just read through really quickly. Experiments have shown, for example, that people generally perceive a 2% pay cut in income with no change in monetary value as unfair. So let's say your money didn't lose any value this year, but your boss says, I give you a 2% pay cut. A lot of people will be unsatisfied because it's a pay cut. But if I give you a 2% pay raise, but inflation is running at 4%, people will think that it's fair, because they see the numbers going up. They tend to notice price increases more than price decreases. So you do it on the flip side, you apply it to inflation, right? Then you kind of understand why people stick onto price increases much more than price decreases. So this is known as the price stickiness or money illusion. Next psychological factor, inflation can also stem from anchoring bias. So it is a type of cognitive bias, binds you to your first impression, causing you to rely too heavily on the first piece of information that you receive on a topic. And as a result, you will tend to link your expectations to the first impression. So this is the perfect example over here. Now you see this car, if it's priced at 30K flat, you'll think it's too expensive. Meanwhile, if the dealer slaps a 60K cut into 30K, you may think that it's a great deal. That's why first impression really matters. And it applies to inflation as well, right? If inflation was notably high recently, like 1 or 2 years ago, which is quite recent, right? Even if the numbers are currently declining, right? The memory of those higher prices can influence your perception of current prices. So there's a lot of mental games at play also. Yeah, back to the numbers. Wages versus inflation. If your current pay is not keeping up with inflation, this is especially true for most workers during the pandemic, then you will definitely feel the pinch of inflation more severely. Okay, so this is the perfect example. You take a look at the median monthly salaries and wages. Although it rose 9.1% in 2021 compared to 2020, you can see this figure over here, right? 2019 to 2021 is actually a decline. Okay, 2,442 to 2,250. So think about this. Inflation soaring to multi-decade highs, prices soaring to all-time highs in 2021, 2022, right? But the median salaries is lower than that of 2019. Yeah, it's no wonder that people still feel inflation much more severely. So final reason over here, invisible inflation. Now this is known as shrinkflation, where your retailer, your shop, or your favorite nasi lemak store, they start to reduce the size, quantity, or weight of the product instead of increasing the price. Now this phenomenon, known as shrinkflation, can make it seem like you're paying more for the same amount of goods. So let's say your favorite nasi lemak store, every time you go to that kakak, right? Previously in 2019, give you a full plate of rice, very generous serving of sambal, plus one big kettle of chicken. And now you go back to the same store, you see 1 teaspoon of sambal only, and half the portion of rice, and a very small piece of chicken. Yeah, very obviously the kakak is sourcing chicken from somewhere else, right? Yeah, that's called shrinkflation. Okay, and when you want to tambah sambal, the kakak says that, hey, tambah sambal, you got to add one more ringgit. Then that in itself is inflation already. Okay, so now when you combine all these reasons up, okay, which again, let me just quickly summarize: inflation varying from region to region, inflation being relative compared to the rich versus the poor, inflation being psychological, invisible inflation, and wages not keeping up with inflation. Yeah, all these factors they compound together and they make inflation to be feel much more higher than reported. Okay, and let's go into the solutions over here. How can we lessen the impact of inflation? Yeah, there's only one solution lah. You gotta invest. You gotta start early. You gotta utilize the power of compound interest. And I always like to go by this fact or motto over here lah. If your money isn't currently earning above the overnight policy rate, which is at 3.0%, you're not only losing out to inflation, but the gains from a higher OPR as well. So let's take a look at the current OPR, yeah, 3.0%, and current inflation. If your investments are currently earning much higher than the OPR, say 4%, then net, if you deduct inflation, you are actually in a profit of 2% every year, right? Because 4% minus 2%, you get 2%, right? But if you have dormant funds, like 50,000 ringgit randomly lying in your bank account, not doing anything, yeah, you're not only losing out to inflation, which is right now 2%, but the gains from a higher overnight policy rate as well. So where to get the good gains from a higher OPR? Yeah, fixed deposits lah. And I've recently wrote an article about this, updated an article about this. Fixed deposits, they're currently giving you 4.22%, which is quite high. And the thing that I always get questioned about fixed deposit, right? Because a lot of people, they are kind of hesitating a bit on fixed deposits because they'll be like, hey, Shinji, fixed deposits, you need to lock it for a period of time. And then after that, right, if I want to withdraw those funds early, how? I've got to forfeit my interest, right? Yeah, that's the truth of it, lah. The majority of fixed deposits these days, you got to forfeit your interest in order to withdraw early. But you can actually do something in order to lessen the impact. So give you an example. Let's say you have 10,000 ringgit right now. You want to make an FD, okay, with Hong Leong Bank. They're giving 3.95% for 12 months, right? Instead of putting a lump sum, yeah, 10,000 ringgit into one subscription of 3.95%, you can actually split it into 10 different subscriptions, each at 1,000 ringgit. Now, that way, if in any case you need to access part of your funds, let's say 2,000 ringgit, you only forfeit the interest earned for that 2,000 ringgit. The rest of that 8,000 ringgit, right, is earning interest unless you want to liquidate them early also, okay? So this is the strategy that I've been using for ever since 2 to 3 years ago. Every time I have a big sum of money, I divide it accordingly according to the minimum deposit so that if I need to liquidate any funds early, I don't lose out or forfeit on all of the interest earned, okay? And it's a strategy that you guys can definitely use as well. So next up, other investment options apart from fixed deposits. Yeah, these are low risk ones. For medium and high risk, I think it's better for you guys to go and do your own research, okay? Because those are much more riskier. Cash apps, Versa, Touch and Go, Stash Away, KDI Safe. As long as you follow the futurists, right, you already know which current cash app that I've been pushing out quite aggressively. It's Versa. Why? Because I've been using it for over a year now. Personal experience has been great, and they are giving the highest return of all the cash apps, which is 4.3%. If you guys have not referred to this article yet, let me just send it to you guys again over here, just in case you guys need to read more about Versa. Okay, next up, money market funds. Yeah, they are giving 4 to 6%. So all of these cash apps over here, right? Versa, Touch and Go, Stash Away, KDI Safe, right? Your money within this cash app actually goes to money market funds. So money market funds, MMFs, they already take a cut, and cash apps, they take another cut, which is why, cash apps, their earnings rate is a bit more lower compared to money market funds. Now, as to what money market funds to invest in, that one I cannot advise you because that would equate to financial advice. Just do a Google search, money market funds in Malaysia, and you will come up with quite a lot of matches. ASB, ASM goes without saying, okay, 4 to 6%. EPF, this one is a bit more, how would I say this, controversial, if I were to put it that way. Yeah, because if you want to go all in or all out on EPF right now, you cannot withdraw your funds until 55, right? So personally, my strategy is to just meet the minimum monthly amount required in order to reach a particular goal by a certain age. Okay, so yeah, but EPF is currently giving 6% per year. And that brings me to the end of my presentation for tonight. Hey, thank you guys so much for joining me tonight. See you guys in the next one. Bye. Stay safe.